All right. So, May 2021, you can join the trade alerts at beststockstrategy.com/memberships. That's beststockstrategy.com/memberships. May 2021 was actually a pretty difficult month because in the middle of May, we had a volatility expansion event where the VIX increased from about 15 or 16 to around 30 intraday. Now, I know that that spike was short-lived, but you'll see in these trade alerts that a few of my positions actually ended up getting challenged. And one day in particular, I think it was like a Wednesday morning, I ended up making about, I don't know, 6 or 7 defensive trades. So I think that the primary takeaway for you from this video, if you want to help improve your own trading, would be to follow some of the trades that I made which were challenged, and then see what I did in that Wednesday to defend the trades, to reduce risk, and to ultimately have a pretty profitable month. Now, May wasn't as profitable as we usually have. Typically, we strive to earn around 3 to 3.5% a month, but we still made pretty good money in May. So without further ado, let's get started. May 3rd, S&P up 20. So Amazon down 18. Here we made a trade in Airbnb. Now, okay, actually, I remembered what I was going to say. I think the most important thing is to make sure that you watch your size. And this is something that I discuss in the options trading education course. The biggest difference between those people who make money and those who lose money when they sell option premium is the sizing of their trades. Because what typically happens, if you're going to use up all your buying power and then you're going to have a situation where there is even a small like 5% pullback in the market, you're going to be forced to close out your positions because you're not going to have any available safety net and you might be forced into a margin call. So remember that the most important thing by far, your primary goal isn't necessarily to make money. It should be to not lose money. Your primary goal should be to play defense, because when you sell option premium, then especially when you sell out of the money options, then you're going to make money. I mean, you can structure your trades so that you win like 95 or 98% of your trades, right? So your primary goal, because it's just natural for you to make money when you sell out of the money options, should be to always focus on that worst case scenario. Always focus on that 3 to 5% of the trades that pose a risk you actually losing money. So that's what I do. Like, instead of focusing on like the 95% of the trades, I already know that I'm going to win 95% of my trades. Instead, I always focus and I always keep in the back of my mind those 3% of the trades where it could actually lead me to have a bad month. So yeah, you always watch your size. So Airbnb, we sold a 135 by 120. Vertical credit spread, picked up $1.52, B plus grade. Amazon, rolled in existing position, picked up an extra $160. May 4th, VIX is up 5%. It's best to wait till the afternoon because the market is showing signs of a pullback. Sold Fiverr, naked put, picked up $230. Should have canceled it, even so it's not a bad trade, B plus grade. S&P down 50. Amazon picked up $445. Zillow, B plus grade, picked up a decent amount of premium there. Shopify, high B grade, not really much premium. I don't know why I made that trade. Boeing, B plus grade. Amazon picked up $520. Closing trade on Melly. Looks like I closed it out for 33% of the original credit received. Uber, B plus grade. Amazon, $400 in premium. Amazon down 40. We have a decent safety net, and if the market continues to fall, then the available premium will increase. Uber. So you can see here that I rolled the position. I closed out the original transaction and reduced the short put by $2.50 while also reducing the width by $1. I paid 21 cents, but I'm still up on the trade. Boeing, closing trade. Original is here, so I pretty much close it out for a scratch. So here what I'm doing is I saw that the market was weak, and I just wanted to increase my buying power as much as possible. Yeah, I said that at the moment I sense that the market is weak. I have a lot of open positions, so I want to prune my position so that if the market falls, I'll be able to maximize my profits by selling as many contracts as possible. Zillow, rolled an existing position, reduced risk by 25%, and also picked up an additional credit. Fiverr, reduce risk by 33%. The original is here. So we're still up on the trade. I don't mind rolling spreads for small debits. The reason is that spreads have tremendous upside. If Fiverr continues to fall, my max loss is only $10 a share, but $160 is less than 50% of its 52-week high. So if it falls, I'll just roll the short put to be in the money, collect all the intrinsic premium while still benefiting from the long put protection. Decent opening. The 575 expires today. Amazon, new opening trade, B+. So Tesla, we made about $371 on that. That was a trade expiring today. Tesla, Amazon, and PayPal are good opportunities. Bought back Netflix. Closed for a 50% profit. Bought back Boeing. Closed for a 50% profit. Sold calls on Uber. Rolled Uber. It filled for a small debit, but it decreased the risk by $200. So you can see that I sense that the market is weak. So I do everything possible to reduce my risk, close out positions, and just prune positions so that even if the market fell an additional like 15-20%, then everything's going to be fine. I'm still going to have significant buying power. Uber. Same thing here, decreased risk by $300 while rolling the existing 41 to 42. Financed it by selling the 56.5 call option. Boeing, closing trade, 60 cents. Closed for a little bit less than 50% profit. S&P down 44, VIX up almost 18%, VVIX up over 6.5%. Tesla was down $43. It's a lot. May 11th. All right. So I rolled PayPal. The original is above. I rolled roll PayPal, the 220s. I rolled it to the 210. So you can see here that I had a $35 wide spread, and I reduced it to a $15 wide spread. So this must be the day where I pretty much rolled everything. So here you can see like I reduced risk significantly. So here you can see that I had a $30 wide vertical credit spread, and I reduced it to 25. Here you can see that I had a $35 wide, and I reduced it to 15. Here I rolled Tesla. I rolled it out by a few weeks for a credit and reduced the strike by $40. The original was above as part of a roll. Then I need to attack Airbnb. It looks like that it's sending some of these messages twice for some reason. I don't know why. Fiverr cut my risk by 50%. Financed the roll of the long put by selling the 200 call. Rolled the 115 to the 120 in order to reduce risk. So here it showed up as rejected, but then I looked at my positions and it looks like one of them filled. However, I had to do it as two separate transactions. But if you're following along, then the original transaction was for both, two of them. Airbnb, roll for a credit, reduce risk. So I increased the long put and I sold the 120 and then I bought the 130 and I financed it by selling the 172.5. So I significantly reduced my risk. Rolled one of the Airbnb short puts. I rolled the 140 down to 135 and I financed it by selling the 165. I rolled 3 Amazon contracts to 1 and I picked up an extra $136. Yeah, it looks like I was having some issues with WhatsApp. So I sent the trades again. Uber rolled up a few of the Uber puts to be in the money so that if Uber stabilizes and goes up, I'll capture that premium. So here what I did, I felt like Uber was oversold. So I rolled the 45 to be in the money, and then I was able to capture the intrinsic premium as well as some additional extrinsic premium by rolling it up. So again, I felt that Uber was oversold, and I then bought back the short 45 put. I then rolled it to 50 because I felt that Uber would increase to the upside. So I captured the intrinsic premium as well as some additional extrinsic. And this trade was profitable, and within like a few days it ended up showing me a profit and we closed it out. Rolled up a few of the Uber puts to be in the money so that if Uber stabilizes and go up, I'll capture that premium. Picked up close to $600. The 12th. Square rolling trade aggressively cut my risk in half by reducing the width of the strikes by 50%. Picked up $56 for the trade. We'll likely close it out early or roll in the expiration to a closer date once things stabilize. That's the original. S&P down over 89, VIX up 27%, VVIX up 20%. Airbnb was actually quite strong. It also reports earnings tomorrow after the market closes. The biggest concern for me is a large increase in VVIX. VVIX measures panic. As a result, while the premium in Amazon, PayPal, and Apple right now are amazing, I prefer to wait until tomorrow to see how the market is behaving. We've done a very good job of reducing risk from large volatility expansion. My gut feeling is that the market will go down a little more and then it'll stabilize. Futures market is up. It was down almost 30 overnight. Rolled the 540, reduced the strike by $40, and picked up a small credit. Roll Boeing, picked up an extra $5 and financed it by selling the 265 call, which expires next week. As you might have noticed, I'm very careful when selling calls. Tesla rolled the 520 to 485, reduced the strike by $35. New opening trade on Amazon, picked up $425. Closed out the Fiverr calls, made a few hundred from that. And I'll try to resell the calls if Fiverr increases in price and use that premium to improve the put position. S&P up 50. Tesla was down 18. About a $230 profit on the Airbnb calls. Small nibble. New opening trade. Remember that I closed the 3 contracts yesterday, so now I'm reselling 1 at 40 cents. Amazon. The trade from yesterday has come in as Amazon has increased in price. That's what happens during large volatility expansion events. You have the ability to make large profits in a short time once volatility contracts. Even so, during large volatility expansion events, there is a lot of fear, so dealing with emotions becomes incredibly difficult. Airbnb, rolling, managing, closed out one of the 130, 135 put spreads on Airbnb and financed it by selling short-dated call options. If I needed more buying power, I'd have closed out the Airbnb calls that are expiring today and used that buying power to sell the new calls. Closed out Fiverr. Open a new position on Amazon. Close out the Fiverr. New opening trade on Amazon, B+ grade. I always try to give the spread leg. So if you're unable to trade naked and you want to trade vertical credit spreads, then I always try to give you the long put or long call option that I would make if I was trading it as a spread. S&P up 60, VIX down 19%, VVIX down 10%. This was a stressful week, but it also shows how important it is to mitigate risk during large volatility expansion events. It also demonstrated why it's so important to not trade too large and maintain adequate buying power levels. By winning almost all your trades, it's tempting to want to scale up your size so that you make more money. The problem with doing this is you'll end up losing money during market pullbacks, whereas those who maintained adequate buying power reserves usually end up making money during those times. Regarding our current portfolio, next week is very important. If there's additional stabilization and a continuation of today's price action, then we'll try to close out some positions early. For new traders, I think it's very important to remember how you felt when the market was tanking this past week. By remembering that feeling, it'll help you in the future avoid trading too large so that in the future you'll be able to reduce portfolio volatility. Yeah, I think this is really important. I think that for me, I don't necessarily try to maximize elation or maximize pleasure. Instead, what I do is I try to reduce pain. So I don't really like the strength of taking losses is much greater and much stronger than the happiness from making money. So as a result, I always try to skew my trades to reduce risk. And if it causes me to give up some upside, then I'm completely okay with that because I know that when the market has a serious pullback, I'm going to be much better situated than a lot of other people who constantly chase like euphoria and constantly chase trying to make as much money as possible every single time. So, and I really think that those people who try to maximize and make like 5 or 6 or 7% a month, I think that it's really only a matter of time until, until they have a large loss. I mean, I don't think, I think that targeting around 3 to 3.5% a month is the best way to go. And yeah, like some months you'll have people earn like 6 or 7%, but the issue with that is the next month there might be a small pullback and you might end up losing money, whereas people who target like 3% might end up making money that month. All right, enough of the talk. The 17th, new trade on Amazon, picked up $2,300 of premium. That's a lot. Here's the spread leg. Market seems relatively stable. VIX is up over 9%. 2 new trades, rolled the 3 contracts at Amazon to 2 by extending duration by 1 week and also reducing risk by lowering the 2760 strike by $150. And new opening trade by selling the 2420 B plus grade. Here's the spread leg. So here you can see I closed out Uber. All right. So I close it out for 254. Closing trade for Boeing. These are the originals, including the roll. So close it out for about a 55% profit. Amazon, new opening trade, picked up around $500. Another reminder, when trading, it's important to always watch your size. The S&P was down almost 1%, but almost all our positions showed a profit. Overall, I don't like that the market sold off heading into the close. May 19th, S&P is down over 50. Volatility is relatively stable considering the large move. VIX is only up 4% and VVIX is up 7%. New opening trade on Amazon, high B plus. VIX is almost at 25. Managed Square. So I increased the long put option from 170 to 175. And by doing that, I reduced the width of the strikes. So therefore, I reduced my overall risk. Rolled up the long put by $5 and financed it by selling a June 4th expiration 175 put. This is why it's important to be patient. The S&P closed up 55 points off its low. S&P closed down 12, VIX up 3% after being up around 20% earlier in the day. So this might have been the day when the VIX hit close to 30. I remember seeing it intraday. I think that the VIX did hit 30. When was this? May 19th. Yeah, having a large intraday rebound from when the S&P was down almost 70 is bullish. Very solid opening. Shopify closed for around a 50% profit. New opening trade in Amazon picked up over $1,200. Closing trade for Netflix closed for around a 50% gain. S&P up 43. Closing trade on Fiverr. This is a trade that I accidentally left it open. So it showed a loss at one time, but then it swung back to show profit. So we made almost 40% on the trade. New opening trade on Amazon picked up $450. Closing trade for Shopify closed for a 60% gain. I reduced the number of contracts in Amazon from 3 to 2 and picked up an incremental $717. Rolled Zillow, rolled the long put from 85 to 90 and financed it by selling a 101 short-dated put. At the moment, our only problematic position is Airbnb. Once our calls expire, we'll sell more and roll the puts. The position is fine and it will be a good learning lesson. I'm managing it in the money position. We have Airbnb and Boeing calls expiring worthless today. May 24th. Volatility is down almost 3%. Picked up $200. S&P is up 41. VIX down almost 9%. May 25th. Closing trade on Netflix. Closed for a 60% profit. So good opening. This month has been volatile, but we are still profitable. Also, we protected ourselves during the downturn to ensure that even if the market collapsed and we'd be okay. Let's wait until later today to see if there are good opportunities for new trades. At the moment, my goal is to consolidate my positions and close out some of the non-core underlyings that I rarely trade and focus more on core underlyings. The reason I switched to non-core underlyings last month was that there simply weren't any good trades available in underlyings like Amazon, Facebook, Visa, MasterCard, Disney, etc. Boeing. Closing trade original is here. 35 cents profit. I just didn't want to hold it for another 50 days to collect 50 cents. Not worth it on a profit per day perspective. Plus, it erases one more underlying for my positions. New opening trade for MasterCard. Low B plus grade. New opening trade. Low B plus grade. Picked up $200. Closing trade on Airbnb. $237 gain. So I made $235 by selling the calls and used that premium to reduce risk in Airbnb. Closing trade on Airbnb. Looks like I made around $350 on the call options. Nice profit on those call options. S&P down 9. May 26th. Let's wait to see what opens up for us, and then we'll take advantage of opportunities as they present themselves. Amazon. I managed 2 existing Amazon positions and reduced it from 2 contracts to 1. So about $550 in profit. Closing trade with Square. The original is above. We rolled up to 170 to 175 and reduced risk by $500. Financed it by selling the 175 put and collected 14 cents. We just bought back the 175 put for 8 cents. New opening trade, high B grade. I'll expand and add more if it goes against me. Another opening trade in Amazon, picked up $420 because it filled at 420. New opening trade with PayPal. Closing trade with Tesla. Close for almost a $400 profit. Good day for us. Wanted to close shop. Square. So it looks like I rolled that in from September to August. Increased the strike by $5 and decreased the expiration by 1 month. Yeah, so you can see that the market's definitely stabilized, up around $5. Volatility is down. May 28th, closing trade. Close for a 65% profit. We have the Uber calls expiring today. Closing out the Fiverr position. Closed for a nice profit, but there was volatility in that position. At one time, the position was challenged. We handled it well, though, and exited with a nice profit. Also, I tried to close everything out on one ticket, but it kept getting rejected. So that's why I spread it out into different tickets. S&P up 3. All right, and that's the end of May. So June 1st. Actually, let's pick up an incremental 1600. Let's save June for next month. All right, so that's it.